Hey everyone, how's it going? It's 7:30 in the morning Pacific time. We're an hour into the market trading session, and hopefully you enjoy this new format where instead of looking at the pre-market, we're looking how the market opens and how we might be trading throughout the day. So let's take a look at what happened since the open. The SPY, you can see, opened higher but is now trading lower. Let's take a look at what that looks like on an intraday basis. You can see that we pretty quickly crossed below that VWAP and we started going lower. So we're definitely directional today to the downside. So normally we see a sector rotation possibly on the Monday with a preparation of the market to move higher throughout the week. That's the bias because on most days, about 70% of the time, we expect to be in more of a bullish mode than a bearish mode. Actually, most of the time we're chopping sideways, but there is normally a bullish bias to the S&P. Otherwise, over the last every period, 10 years, 20 years, 30 years, 50 years, the S&P trends higher. So there is a bias to the upside. But this morning, we're definitely moving down. What's interesting is that the Russell 2000 is flat, the Dow Jones is actually up, and the QQQ is leading the way down. So actually, I wouldn't be surprised if the SMH was the one. Yeah, SMH is really leading the way down. We're seeing this real divergence between the SMH and the Dow Jones right now. So there's a lot of movement towards the safer sectors. Let's take a look at our overall trends in the market. You can see that these were drawn quite some time ago. I don't remember exactly when, but probably when we were hitting these all-time highs, we drew this and then we broke through on that pullback or the correction. And we moved up and we're just now hitting that uptrend. So we've been looking at it so many different ways over the past couple of weeks. This is just another way to show, hey, we're still at resistance here. We're not in the clear. We're still not, we shouldn't be super bullish at the moment. You can see on the QQQ, it's the same thing, except more extreme. If I extend this line outwards, you can see that we're far below that line, whereas in the S&P, we're coming up to touch it. And then Russell 2000 broke out above this flat top, and same with the Dow Jones, broke out of its channel. So we're definitely feeling a lot more comfortable with the Dow Jones. The one thing that we want to be very, very careful of is everyone on Friday was expecting the Jackson Hole announcement to be very dovish, meaning that indicating that we were going to start decreasing rates. And we got a lot of language from Jerome Powell indicating that we were getting a lot more dovish. What people did not get, though, was necessarily a sense of timing that was absolutely going to happen in September. He said, well, it's going to depend on economic data. It is becoming more appropriate. And we also have this softening jobs situation. The revision of the jobs down 818,000, that is not helping the case. So we thought we created a lot more jobs, or the government had reported that a lot more jobs were created in the economy that was actually fact. They revised that down by over 800,000. That's a huge revision. So the jobs economy, there's like all this whole time, it's like, oh, we're doing so amazing. We're able to bring down inflation without the destruction of jobs. How is that possible? And they were patting themselves on the back for the last 2 years. And all of a sudden it's like, oh my God, we didn't. We actually we haven't been doing that. This isn't quite the soft landing that it looked like we were going to get. So this is not super great news. And the S&P couldn't make a new high. The QQQ couldn't make a new high. It's still coming down lower. Looks like it might break below that MA50 today. The SMH couldn't make a new high. The TLT didn't go screaming higher. So why was this so hard? Why was it so, why didn't the markets react enthusiastically? Well, over the last couple of weeks, I've been saying how there was a lot less room to the upside, a lot more room to the downside, and everything was priced in. And if we didn't get a shock, that like a very clear indication that we are absolutely getting rate cuts and maybe in the 50 basis point range, then there wasn't really much upside in the market, and that proved to be true. And we're still struggling today, even to get to new highs. So this is not looking great for, it looks like at least another pullback for now. Or a chopping sideways period. So what we want to do is we want to see today what sectors so far are performing, because we definitely have a downward bias on the trading day. It's going to be quite a recovery at this point. There we go. If we come back, because as you can see, these VWAPs are sloping downwards. It's especially, look at the QQQ, QQQ. Look how sharp that is. So it's going to be almost impossible for this NASDAQ to come back to even a break even or to swing this more positively. No matter what, at this point, it's pretty much clear that we're going to end lower than where we opened today. We're going to have a red bar in the QQQ today. Not as obvious in the S&P and clearly not the case for the other two indices. But the QQQ, you can see, is like this is a sharp bias towards the downside in the QQQ. And even if we recover, we're going to have trouble at the VWAP. And even if we can cross through it, we're not going to be able to recover. So today is a directional day for the QQQ. It's a directional day for the S&P 500. It's a sideways random day for the Russell, and a barely an up day for the Dow Jones. So the easiest and best play if you're a day trader right now would be to focus on the QQQ or the QQQ type stocks and see if we can recover at least to the VWAP today. And that's a great place to add to a short or to initiate a short. If we don't quite get to exactly VWAP, maybe somewhere close, maybe the one standard deviation out, that might be a good place as well. But the highest probability guarantee would be over here at the VWAP. Let's take a look at our sectors and see how we're separating on a minute by minute basis. There we go. So you can see this one right here, which one is that? I've got to figure out a better way to do this. Minus 2.3. How do I see which one is which? I would imagine that this is the SMH. Oh, here we go. There we go. There we go. Okay. This one right here is I don't have one that's minus 2.23%. SMH, okay? So that's SMH. You can see that's clearly leading it the way to the downside. We also have XLK. So tech is definitely getting hit really hard. Our best performing one is XLB materials. That's interesting. But you can see these two green ones are actually on their way up. So it looks like utilities and staples. So all the defensive sectors, XLB is somewhat of an exception, but that might be following energies, because energies, we had some news out of the Middle East that things might be escalating. So energies shooting up, materials moving up in sympathy, but you can see that it kind of peaked out. It started to move down. So really the two that are in play to the upside are XLU, XLP. Those are our most defensive sectors. And then our ones doing the worst are the most speculative sectors. So that's not too surprising. So we really are getting this separation between the Dow Jones type of stocks and the tech and semiconductor type of stocks. And that's really pulling the S&P downwards, and especially the QQQ, because QQQ won't have the benefit of XLU and XLP type of stocks pulling it upwards and averaging some of that downside out. It really is concentrated down 0.6%, so not hugely down, but not wonderful as well. So it's this orange one right here. You can see that's definitely, it's basically following the S&P 500. So definitely down on tech, down on semiconductors. If this sets the tone for the rest of the week, then we can count on these defensive sectors to keep on moving and just bleeding, or just really bleeding on the SMH type of stocks. NVIDIA later on this week might help a little bit, but I wouldn't count on it, because if the Jackson Hole event didn't bring everything up, NVIDIA by itself is not going to save the entire sector. It might look good for itself. It might give a temporary boost to the sector, but it's not going to drag the entire sector up by itself. And that's assuming that everyone likes the earnings. It could be a situation at this point where even though if they have great earnings, they might just be flat or up a little bit, or they might even go down a little bit if people are really panicking and abandoning the SMH type of stocks at the moment. So we'll see how that plays out with NVIDIA later this week. So far, this is how we're looking in the morning. It's these tech stocks are not doing well, and these more speculative, I'm sorry, the more defensive sectors are the ones that are getting all the positive attention. Let's take a quick look at our economic reports, and that will round us out. Well, and then I'll look at VIX, and I'll look at TLT bonds. So today is this update. Okay. Tomorrow, nothing today really. Tomorrow, consumer confidence, that'll be pretty important. Then we've got GDP. GDP on Thursday. That's going to be the big one. GDP, we'll take a look at continuing jobless claims. Just the Chicago PMI, here you go, PCE, personal income, the PCE portions of the personal income and outlays. So we have big reports coming out on Thursday and Friday. So for the most part, I don't expect institutions to really come in until after NVIDIA reports, after the GDP, after personal income outlays. It's probably going to be a relatively quiet week, and our volume is very low still. So we'll see if we can get near the moving average, but so far it looks like it's going to be pretty quiet. So most likely we're going to chop sideways for the week. Although we can clearly see that today QQQ has a clear downward bias, and if we break below the MA50 and especially at EMA 20, we got quite a distance to move downwards. But we could call that a wide range chop sideways. That's possible as well. Okay, so that's it for this morning. We're going to be focusing on the defensive sectors to the upside, and we definitely do not want to go in and try to catch a falling knife for the semiconductors or tech. All right, have a wonderful rest of your day, and I will see you in the post-market session.